Hi, my name is Fan Yang, your Chief Currency Analyst here at ForexMinute.com. You're watching today's Forex video briefing. It is Monday, September 29, and we're in the middle of the U.S. session. Tomorrow, during the September 30th U.S. session, we will get the final edition of Canada's second quarter GDP, which was estimated to have been 0.8%. The loonie, or the CAD, has been weak against the US dollar but generally strong against the Japanese yen. Both the dollar loonie and the loonie yen are in consolidation of the GDP data, so let's take a look at their charts. Here, the 1 hour US dollar Canadian dollar chart shows a market completing a head and shoulders pattern and breaking below a rising trend line. However, we are seeing buyers in the 1.1130 area. The 1.1120 to 1.1130 was a previous resistance area, and also where the 50 simple moving average reside. A break below 1.1120 with the 1 hour RSI falling below 40 would be needed to signal a bearish correction. Even this right now is simply a sideways consolidation. Okay. Now, in that scenario, the 1.1050 area will be the next key support ahead of the GDP data and even after it. If price falls below 1.1050 after the GDP data, it will likely clear below the 200-hour simple moving average and a previous support resistance pivot. Okay, which puts the dollar loonie into a more significant consolidation. However, if price can hold above 1.1050, the bullish outlook is still in play. And when you look at the daily chart, the 2014 high here at 1.1278 would still be in sight. A break below 1.1050 simply puts the dollar loonie back into consolidation mode with downside risk towards the 1.10 resistance and key psychological level down to the 1.0950 area near these previous pivots. Okay, so for now there's still that bullish outlook. Let's see if the market will break below 1.1120 to clear the path for some short-term bearish correction. But again, look at 1.1050 as a key level for support for the bullish outlook to continue. The Canadian dollar Japanese yen pair is consolidating in the 1 hour chart. When we look at the 4 hour chart, we can see that it is consolidating after a bullish trend. The moving averages and the RSI suggest that the market is still bullish. It should be noted that the CAD yen is just coming off a fresh high on the year in September at 99.81. Also, there is further room above that towards the 2013 high at in the 101 to 101.05 area. You could see that more clearly in the daily chart going back here in May 2013. Now, going back to the 4 hour chart, we can see that the current consolidation around 98 is breaking a rising trend line from August, but it is not a bearish break but rather a sideways one, so there isn't really a bearish implication. It simply reflects that the trend may be slowing down. Okay. Now, price is still above the 100 period simple moving average in the 4 hour chart. And after the GDP data, if the CAD yen rises above 98.73 pivot here, so above 98.75, the bullish continuation scenario is in play with the 99.80 and the 101 levels in sight. Now, a break below 97.65 after the GDP data would push below a recent support resistance pivot below the 100 period simple moving average, and it would open up the 96.50 level, which is another support resistance pivot here, and it is also where the 200 period as simple moving average in the 4 hour chart resides. And that wraps up today's Forex video briefing. Thanks again for watching. Trade safe, trade well.